Alright guys, this is Jonas from YONAYIELD.
Oh, by the way, this is a friend of mine, Tree.
I am Groot!
I am Steve Rogers.
I hope you had an amazing trading week.
Thinking about the way that you know me. No one ever cared like you care for me. You're such a
Now we want to do the weekly report and see if we can find some opportunities.
I'm still seeing zeros over here, Angie.
Let's stop being cute and do your job.
Oh, they're taking them out of the car now. In about 30 seconds, your window is going to close forever.
Okay, relax. There was an accounting error. We said it.
What did we discuss about in the last weekly report?
Previously on the Real Forex Trader.
We said the indices should be up until the end of month, so that happened, and we said there should be some euro strength. So both ideas worked out. Now let's see how this will potentially continue into the next week. How are we analyzing the markets?
I was able to calculate certain patterns using algorithms. If you look at column 4, this was the first. You're good. Okay, it's effects.
No, seriously, there will be a more subjective opinion of mine, and there will also be a technical analysis. Alright, let's look at the DAX. We are observing the following right now. We are right around the 61.8 retracement, so that will be very interesting for the month of June. Because should the month of June stay above the 61.8 retracement, then I'm expecting we are pretty much done with the corona crisis. However, should we get a turnaround candle in June that potentially closes underneath the 61.8, then it is highly likely that we are gonna go down again. Doesn't mean there need to be the big crash, but I would suspect a 50% drawdown move that goes down 50% from the current levels again. Let me illustrate that really quickly. What I mean by that is that we would retrace this move that we saw here with the two green candles and go in this area 50 to 61 when we measure from bottom to top. Right, now let's go down on the weekly. Here is where it gets interesting. So we can focus on this candle right here, and we can see the following. This was the target area for this candle. Here we always saw some kind of pullbacks. However, we are above this right now and we are around the 261.8. Potentially, we still have room to the 300%. That, however, would be the final goal for this move. Now let's focus on the second candle. Why would we want to do this? Because that one has been a bullish engulfing of the prior candle, so we should definitely take that one in account as well. Alright, and if we're looking at the second one, we have this kind of target area above here, and we're getting a cluster around the 12,200 up to 12,300 potentially. So this area here is at the moment my favorite target area for the DAX, and I'm expecting a turnaround move here around the 12,200 up to 12,300, potentially even 12,400. Looking at the weekly candles, we are definitely in a uptrend because we are green and we took out the last high. However, as you can see, we are already seeing two green weekly candles, meaning everybody can see now the trend. And normally after 2 or 3 candles, we want to reverse. Okay, because everybody want to jump in long now because it looks so bullish. And what will happen? We will reverse. All right, so very crucial here, 2 candles already. There could, of course, be one more because we always see between 2 or 3 candles. So maybe one more green week to the upside, which could then target the 12,200 area. And after that, we could reverse. That all depends if we can take out the high of this weekly candle here, which is around 11,800. Should we take out this high at 11,800, then I'm definitely expecting the 12,200 to 12,400 area coming. And there we need to evaluate again because we could turn around there. Should it be that in the new trading week we are not taking out the 11,840 level, then that would be a strong sign that the up move has potentially run out of steam because we didn't make a new high, and that means we could turn around. All right, So crucial here. Now let's look at target retracements. We can see that this weekly candle has been taken out to the upside. So we want to focus on the target, and here again we're seeing the 200% to 261%. So this is the target area that gives us 12,020 up to 12,500, okay? All right, just looking at this candle, we are getting this target area. So there could very well be one more green week to the upside, and then potentially after that week we could turn around in this target area here. All right, so far so good. Now let's take a look in the daily. In the daily, we can see the following. There was a weakness candle here on Thursday. However, this candle didn't get triggered. We wanted to go down a little bit, but we got sucked up in the session. This is a clear sign that this reversal candle is not coming into fruition, meaning that it is a clear sign that we still want to go up. All right, so let's target this level. So that is the 11,516. As long as we're above this level, we should be long, and we should be targeting this high here, like shown in the last weekly report, which is around the 12,280 level. All right, let's draw that up as well. However, I don't think one shadow here to the upside is enough. I'm thinking that Monday should come in red or should reverse on the downside again, probably testing here this low at 11,516, maybe even make a marginal lower low. And if this candle also gets sucked up on Monday, then we would have two shadows here. That will be a pretty big sign that we definitely want to go back to the upside and go target the 12,200 level. So Monday will be crucial. Should it be that on Monday we don't close underneath 11,516, then I'm expecting that we are still long. However, are we taking out this level to the downside and should we be closing red? That would be a strong sign that we are already reversing at current levels and that the 12,200 might not come anymore. Like I said, it could be already, because in the weekly we saw two green candles to the upside already. After two green ones, we can reverse if we want, because everybody can see the trend to the upside, and if too many people see it, that's not good. All right, and this gives us following levels. Okay, the 11,560 is potentially a buy. Like I said, it can even go a little bit down more. Why not? Just like marginal, maybe 11,480. But if we're seeing stabilization in that area, that could be a good long signal. And then we have, of course, a sell here at this level, which is around 12,270, 12,280. Taking a look closer here, also in focus should be this daily candle, because technically we are in the range of this candle. As you can see, we didn't go on the upside and we didn't break it to the downside. So should it be that we are testing down here again on Monday, we might as well actually test the bottom of this candle, which is around 11,430. So let's draw this one up as well. Okay, so 11,430 is also a crucial point, and let's put here another buy. All right, should we close on Monday underneath 11,430, that will be a signal that we are reversing to the downside already, and that maybe we're not getting this third green weekly candle to the upside anymore. Okay, so definitely have this level here under observation. All right, let's go to the 4-hour frame really quickly, because we want to do an elliott wave count here to finish the picture in the DAX. Alright, first let's focus on the corrections, because they are way easier to see. So we can see here an ABC correction to the downside. Alright, that's fine. And also here we can see clearly a 3-wave corrective pattern, ABC to the downside. Alright, and here there is another corrective structure that we can see here. Okay, this has actually been a running flat here. So this is a zigzag, this is a running flat, and this here is a flat correction. All right, question is how does this move look? Everything else should be now impulses. Actually, there's a little correction here. You can see that little one here, probably a sub count here, because that one is small. So bigger ones are here and here. You can see these are big, so these should be in the higher count, and this one they are small, so they should be in the sub count actually. So it looks like we have a wave 1 here, then we have a wave 2 here, then this one is a sub count because it's smaller, and wave 3 should not be here because that is way too short for a wave 3. Normally wave 3 is bigger, so it would make sense if wave 3 would be here. And normally it's also like that in the wave 3 you can see the structure, the substructure the best, which would make sense because here you can see clearly the substructure of 1, 2, 3, 4, 5. So I'm thinking wave 3 should be over here, and then there is a wave 4 here, and then this one here is the last wave 5. All right, okay, 1, 2, 3, 4, 5. So a 5-way structure here for the DAX. And now interesting, we want to look here in the sub count of wave 5 to see when it can be potentially finished. So let's go in the 1 hour frame for this. So it looks like this here is wave 1. So this would be wave 2, wave 3, potentially. Then wave 4, that one should be flat. Maybe it's finished, maybe not. I'm not sure about that. And then wave 5 to the upside, which would give us a target here at 12,200 something. All right. So it looks for me at the moment like this. Wave 3 is a little bit short here. However, if I count here wave 1 here, this little one that's too small should be a sub count here. So I would think this structure would be like this. However, I don't like the wave 3 is so short, but it can happen, of course. As long as it is not the shortest one, that is okay. All right, you guys. And that's it for the DAX. Okay, here we have the Dow Jones. Let's look in the bigger time frame really quickly. As you can see, pretty much the same as the DAX. We have 2 green monthly candles to the upside, and we are still intact for the long side at the moment. Okay, now let's look in weekly. Okay, we have now 2 green weekly candles, and each candle made new highs, so also here the long side is intact. However, let's look at the targets really quickly. If we focus on this candle, which has here been taken out to the upside, we're getting this target area up here. So here in the Dow Jones, there would still be some room to the upside. And let's take a look at this weekly candle, which has been taken out to the upside. Here is the next target area, and this actually here is the bigger target zone, and you can see there is a cluster around this 27,180 level. So also in the Dow Jones, same picture as the DAX. I would expect one more week to the upside. However, because we're normally turning around after 2 or 3 candles to one side, that could be the last week to the upside, and then we could start some kind of correction here as well. All right, let's look at the daily. Okay, same picture as the DAX. Here was a weakness candle, but it didn't came into fruition because Friday was sucked up to the upside in the trading session. So also here I would expect on Monday probably targeting the downside again here at 25,000, trying to break it, but it cannot. And if it makes another shadow to the upside, then we should go long on Tuesday or Wednesday, and then this area up here would be the target area. Here we can see a crucial point with this kind of high in the chart structure, and also we can see nicely that this candle almost has touched the high that we made here in April. So I'm expecting the Dow Jones at the moment to be in this range here. Probably, like I said, testing this daily low here again, and then we could go to the upside to test this level here at 27,000. Let's go on the 4 hour really quickly to see how this looks in terms of Elliott waves. We want to do a quick Elliott wave count. All right, let's focus on the corrections first because they're easier to see. So we can see definitely a correction here, ABC, which has been a beautiful channel here actually. And we can see another correction here, ABC to the downside. Okay, and if these are the corrective moves, then the other stuff should be the impulsive move. So let's count that one up. Okay, so it actually looks like this could be a 5-wave structure, giving us a 1, a 2, a 3, a 4, and a 5th wave to the upside. And let's take a look inside the 5th wave, because this is of course where it gets interesting for us. So I'm thinking we potentially have seen here a 1, 2, then here probably a substructure in the 3. So probably I think the 3 would be something like this, 3, 4. The wave 4 doesn't have to be finished. Actually, I'm thinking it should get more bigger. So this is maybe only the first wave of 4, of the correction of 4. So maybe here A, B, C and something still coming here, and then we could get a 5 to the upside, so that move would finish then around the 27,000 level. Okay, so let's delete this one really quickly here, so we can go in the smaller time frame. Now we want to look in the hourly and clean this up here a little bit, so we can see here wave 1, ABC down, then wave 2. This I'm expecting to be a substructure in wave 3, because I don't think wave 3 would be finished here, it would be too short. Typically the wave 3 should be long, and we can see a clear corrective wave within the wave 3. That is normal. So I normally call this actually 3A, 3B and 3C. So then after ABC, the 3 is finished, okay? So first move of wave 3, 3A, 3B, 3C. And if you want to know why there is a corrective substructure, you need to go even smaller. So probably it will be 1, 2, 3, 4, 5. And that means wave 3 will be finished here. All right. So then, of course, we can take out here the high already. That would mean wave 4 will be finished. However, I don't think it's that likely. To me, it much more looks like there is a 5-wave structure on the downside here, which would be an A. Then there will be a 3-wave structure to the upside, which would be a B, and another 5-wave structure to the upside, which would be a C, and then the wave 4 would be finished. All right. So for me, it looks something like this: A, B. Potentially, the B can be overshooting. Why not? That would actually be typically everybody would want to get in. Then everybody would think, now the 27,000 level is coming. We need to get in. We need to FOMO in, and then this would happen. Okay. And the smart point to buy would be actually here, and then we would go to the upside to 27,000. Okay, that is my analysis of the Dow Jones. Of course, this move would be kind of similar in the DAX. Needless to say, all the indices are correlated with each other, because this is where it gets interesting. We want to take a retracement from point 2 here to 3. And here you can also see something why I don't think this wave 4 is finished. Here we turned around too early, okay? So I'm thinking this is just a 5-wave structure to the downside, so 5-wave in the sub count, which means this is a wave A. Then we should get actually 3 waves up, so A, B, C, giving us a big B. And then we go down again. It will be typically, if we overshoot here a little bit, everybody want to FOMO in. 27,000 is for sure now because we are long, everybody can see it, right? So we will go down here, and then we would actually target the area around the 38% retracement, and that actually will be the good area to buy in. I think so. All right. And after this, we could get another 5-wave structure to the upside, finishing the bigger move. And in the timing, I would say this will take another week, maybe potentially 2 more weeks. And after this, I'm thinking we will reverse in June. I could be, of course, wrong on the timing. Maybe it even takes until July. However, subjectively, again, here's my subjective opinion. Please be careful with that one, because technically we are clearly long. Subjectively, I'm expecting a bigger reversing point in June or July, and a 50% move to the downside again to the corona lows. All right. But like I said, I could be totally wrong. That's my subjective opinion only. Once you would take out the 27,000 level in the Dow, or respectively in the DAX, it was the 12,200 level, then of course I would need to say that I'm wrong, and I would need to change my subjective opinion. That much at this point. So this is here my favorite way how this could work out. Like I said, especially if we go in the area of Elliott wave, it's very hypothetical. Of course, it doesn't need to turn out like this at all, all right? But this is what I'm seeing at the moment, so I'm going with this analysis at the moment. All right, guys, and we will skip now the S&P 500 for the moment, because we have done the Dow Jones and they're just too similar. So if I would analyze now the S&P 500, it would be the same thing over again. Okay, let's look at the US tech index, so that's the NASDAQ, because that one has kind of a different pattern, and we discussed last week about this structure, which could potentially be a ending diagonal. So that could still be, so be careful about that one. Maybe it could be that actually we don't see that much upside to the NASDAQ anymore because of this ending diagonal. So meaning maybe Dow Jones, S&P could outperform the NASDAQ for a little while now. Could be, but we will see how it then works out. Let's look quickly here in the weekly. We talked about this area which we should be careful about in the last weekly report, and now we actually see a clear sign with the weekly close that we are above it, okay, meaning it didn't turn around here. There was a high probability actually 3 weeks ago with this candle, but as you can see, it didn't come into fruition. Now that we have been closing above it, as long as we don't fall inside this zone again with the next weekly candle, we should expect actually more upside here, targeting the 261.8. That will be the next target for the NASDAQ. So NASDAQ actually could make a new all-time high here, and after this 261.8 reverse to the downside together with the other indices. But keep in mind, if next week for some reason we become red and we're closing again in this range here, in this zone under the 223.6, that would be a strong signal for me we are turning around. Okay, so if that would happen, what would be my outlook? Then I would say, okay, we really have this ending diagonal in the NASDAQ, and then we should reverse down actually to the breakout level, which is at 7,900. All right, so this is crucially here. Question that remains to be answered is, are we in the ending diagonal in the NASDAQ or not? So can we observe, for example, that the DOW and the S&P are outperforming the NASDAQ? That will be a big clue for me. Okay, NASDAQ is in the ending diagonal, and that means it is just stalling and buying some time until Dow and S&P get their targets to the upside, and that would be another confirmation that all the indices are reversing together maybe in 2 or 3 weeks, all right, to the downside. So very interesting here. However, should we not go again in this area, then like I said, 261 will be the next target, and that would mean what we are currently seeing is not an ending diagonal. We are just going to the upside normally, and it just looked like an ending diagonal, but it was not. That of course could also be. However, what is my strategy personally here? I think the indexes are still long for 1 or 2 more weeks, but I will play the long side maybe in the DAX or in the DOW, and I would not try to play it in the NASDAQ because this ending diagonal stuff is spooking me out, of course. Alright, that much for the NASDAQ, and with that being said, we are closing now the analysis of the indices. Alright, let's take a look here at gold. We want to focus on the monthly picture. We can observe the following here. We are clearly in a long trend to the upside. Okay, crucially, we took out this structure here to the upside, which then became support here. It was resistant, it became support, and we are still not at the target of that structure, I think so. Let's take a look here. All right, and you can see gold has still room to the upside. This here is the target area, so that would bring us pretty close here to the top. So that would be the target area here. If we are really impulsive, even the 261.8 could be a target, but I would just focus on this area here for the moment. Let's take a look here at the monthly candles. We can see we are in an uptrend here because we have green candles. However, the last candle didn't take out the high of the month before, so that is a little sign. Okay, potentially we are stalling, potentially we want to correct a little bit before we go again to the upside. So next month it will be crucial to take out this level here. Let's mark this one up. Okay, so that brings us around the 1747 level. So this one needs to be taken out. If it can't for another month, then actually we can reverse to the downside. However, for me, it looks like we want to go in this area up here. Good. Now let's take a look at the weekly. Okay, weekly we have seen a red candle here and another red one. However, we are seeing shadows. This turnaround candle here has not been coming into fruition. You can see it has been sucked up. So what would I expect for gold for the next week? I would expect actually to go on the downside again, test this low here of last week, which is around 1690. Should we stabilize here again and be sucked up again, then after that week, we can go again to the upside into this target area, okay? Potentially next week, a little bit weakness in gold, but should we not break underneath the 1,690 level, that would mean the week after that, so the week after next week, we can again go on the long side. However, should we take out the 1,690 level, then I would be careful. If we get a weekly close underneath this one, underneath this shadow, then I would be careful, because then the correction could be actually getting bigger. All right. However, for me, it looks like we are just correcting here on a high level, but the correction is small and probably remains to be small and only wants to test here again and then gets sucked up again. Let's look really quickly at the 4 hour. Actually, I want to see how this correction looks. Now let's look at this in terms of Elliott, because for me it looks like there is an A here, there will be a B here and another C here. B doesn't need to be so high, can also be actually already finished. Let's take a look here. This is interesting. How do I know this? Because I look already at the sub counts. If you have a trained eye, you can see it already. Okay, so I can see here 1, 2, 3, 4, 5. Okay, there's a 5-way structure to the downside, meaning there is an A finished. Here there should be a 3-wave to the upside, which potentially is actually finished. Let's look at that one. So A, B, C could be a finish actually. If this is a zigzag corrective structure, which I'm thinking it could be, then it should actually not go to the high anymore. It should turn around between 50 and 61. So that could be the case actually. Let's take a look here. Okay, yeah, we're at the 61 here. So potentially the wave B is finished and we could get another 5-way structure to the downside. Okay, so 1, 2, 3, 4, 5 to the downside, and maybe it would be nice if we could see a test of this horizontal structure right here, which I've marked up priorly already. Support would be here and here. All right, so that would be the target area, and there would be a buying opportunity here. So how would this go with the weekly? Because we said on the weekly we have one red candle, and then another red one came with, but that one got sucked up, and now we're thinking about another red week, but that one should again be sucked up. So I'm thinking, how could this week be turned out? We could actually start correcting here to the downside, 5 waves, and then end of the week, maybe Thursday or Friday or something, we should get sucked up again here from this level, just to close again in this range here. So we should close above 1,690 like I showed you in the weekly. So then the weekly picture would be intact, and then we could get another move to the upside on the week after next week. Okay, so all of that together would mean there would be a nice buying opportunity in this support area. So let's draw this one up. So potential buy here. Okay, but like I said, be careful with the Elliott wave. It's very hypothetical, and I like the price actions in the candles more than what's going on with the Elliott waves, but I try to combine them a little bit so that can even give me a stronger idea on what's going on. Okay, so much for gold at the moment.